All right, so as I was saying, if you can hear me, go ahead and type your name and type where you're joining us from. And you are indeed welcome to this episode. I mean, this is the 4th edition of the Impact series, the 4th installment in the series since the year began. January, we had our first, we had our second in February, then our third, and now this is our 4th. So I'm super excited to host you, to welcome you onto this session. It's been long coming. It's exciting preparing for this thing. I mean, I've had a lot of thinking. I've had a lot of research, and indeed, quite a bit of information I'm going to share from personal experience. So indeed, a lot has gone into this, and I'm super happy that you are here with me this evening to be a part of the Impact series. And so go ahead and type your name and type where you're joining us from. I am Kelvin Owusu. I'm a wellness consultant, and that's a medical practitioner who does not attend to sick people. I attend to people who are well and want to stay well, so that's what I do. And I'm also a coach. I'm a financial literacy coach. I help people deal with various financial issues. I help them, put their finances in order, because we are working, we are getting income, but many of us are still struggling. And so we need somebody to help us, to guide us and take us where we want to be. And that person is me. And so you're welcome to this installment of the Impact series. And I do hope that it's going to be as beneficial for you as I have anticipated, because a lot of work has gone in, and I hope that it's going to be worth your while. So if you are joining us for the first time, I'd like to know. So if this is your first time you are joining the Impact series, please go ahead and type first. And this time we're also streaming live on Facebook. So if you're joining us on Facebook, go ahead and put up give me some hearts or drop a thumbs up, so I know that you can also hear me loud and clear. I'm happy to welcome my Facebook audience as well. So it's going to be a packed week and packed evening. We're going to try and pack a lot of information into 30 minutes, and we're going to get it out there. My aim is that at the end of this session, after all is said and done, I want you to ask yourself some questions. I want you to figure out certain things for yourself, because if you indeed know where you're heading with your life, it will help in a lot. It will help, for you to put things into perspective, so that you don't just go around running around, joining the rat race just because everybody says you should. There's a lot more that life can offer you if only you know what to do or where to pass, where to take it to. And so you're welcome once again to the Impact series, the 4th edition, and I'm happy to host you. Now, as always, our topic is a challenging one. It's it's an interesting one. I actually had a lot of questions already. When I put out the poster, and the topic says that don't just work for money. And people were like, so what should we work for? In fact, I had somebody actually attacking me in my inbox on Facebook, and it was quite interesting. He said that you made money and you don't know what to put your time, so you just come and sit there and talk nonsense. Charlie, that cuts deep, but when you know what you are trying to achieve, it doesn't matter how much negative vibe you get, you still forge ahead and make it a reality, because hey, I saw the vision, he didn't see the vision. It's not about him, it's about me and what we are trying to do. And I know that indeed we are doing a lot of good things. Those of you who have been on the Impact series for the past 3 previous episodes, definitely you know that there's some value here, and this is not going to be any different. We are going to dive right in and make the most of it. So if you are joining again on Facebook or joining on Zoom, please let me know who you are first of all. Let me know where you are joining us from. I'll be happy to know all of that. So let me know who you are and where you are joining us from, so that we can indeed take this to the next level. But we are getting started right away. So Impact series, the 4th edition. The topic today is do not work for money. 3 reasons why you should not work for money. That's what we are going to be discussing today. And let's just dive right in. Now we are talking about money, right? We are discussing money. And so we need to know what money is. Of course, I know everybody knows what money is. Money is that thing that's in your wallet that you used to go and pay for things, or that thing that's on your phone. I know now there's e-learning, so people don't keep money on their phones anymore. But yes, I mean, that thing called money, that's what we are discussing today. And money is a medium of exchange. I mean, that's basically what it is. It's a medium of exchange. A group of people came together and decided that this is what we want to use to trade. So we call our currency cedi. There are other currencies that they are called dollars. There's pounds, there's euros, there's yen, there are several of them now. There's even e-currency like Bitcoin. There are other currencies as well, Ethereum, you name it, it's probably there. All these are forms of exchange, so it helps you to exchange your value for cash, so that's money. But let's talk about the history of money. Now, how many of us have actually studied the history of money? If you are joining me and you have actually studied the history of money, go ahead and drop an emoji in the comment section. Let me know that indeed you have studied the history of money, because it's quite an interesting history. It's a very, very interesting history, and I'm going to take you through briefly shortly, so that we'll know what the history of money is, and we know where we are right now. So quickly, money. In the past, the medium of exchange was barter. Barter trading. I'm sure we learned about barter trading. Where if I'm a farmer, for instance, and I farm tomatoes, and I wanted to get a pepper, I'll take some of my tomatoes, and I'll take it to the pepper farmer, and I'll give him the tomatoes, and he will give me the pepper. So that way we've actually exchanged. We've exchanged our goods as barter, as trading. If I had bananas and my toilet was misbehaving, so I needed a plumber to come and fix my toilet for me, I'd have to go around and look for a plumber who also had a monkey as a pet, because that plumber obviously has need for bananas, so when I give the plumber the bananas, he will use the bananas to feed his monkey. And then because I've given him the bananas, it means I've paid for his service. So he will then come in and then fix my toilet for me. So that way I've exchanged my product, my bananas, for his service. So I've paid him for his service. So that was how people did business back in the day. We traded with barter. But you see, immediately you can tell that there could be issues with this form of trading. And one of the major issues that can present itself is the fact that if I have an item that nobody needs, then it means I cannot trade that item for a service. That means that if I have, let's say, if I have a goat and nobody wants a goat, that means I cannot eat, because nobody wants to take my goat and give me rice, or nobody wants to take my goat and give me yam. You see, so that was obviously a challenge. You see, or even if somebody wanted to take my goat, he or she must have a place to keep the goat. If I'm not ready to kill the goat right now, I must be able to keep the goat so that when the time comes, I can kill it, or I can also trade it. And so that was the challenge with the barter trading system. And so it did not allow for extensive trade. I mean, if I have, let's say, yam, and at the time I carry the yam to another country where they don't need yam, they don't even know what yam is, I cannot trade with them. I cannot collect whatever they have, because they have no use for my yam. And so that was an obvious limitation for the barter trading system. And so it got to a time they needed to find a way, some form of commonality, something that they could a form of standard. So then that's when the metals came into use. So metals like gold, silver, aluminium. In Ghana, among the Ashantis, there was the cedi. That's where the name cedi came from. Cedi is like cowrie. That's the cowrie shell. So all these were precious things at the time that were used as currency. So if I had 10,000 shells, I was a very wealthy man. But that also presented a challenge, because if your medium of exchange was gold, yes, gold was universal. Every part of the world had gold, So gold quickly became the standard. That's where the term gold standard comes from. I'm sure you heard gold standard before. If you've ever heard gold standard before, please type a yes in the comment section. Let me know that you have indeed heard gold standard before. I'm sure everybody has heard about gold standard. So that is where the term originated from. You see, when we started using the metals as a means of trading, and because gold was universal, it became the standard. It's because silver is easy to alterate silver. It's easy to alterate bronze. So all those ones, even though they were used, they were not as valued as gold. So gold became the standard. But this also presented a major challenge. I'm sure all of you have watched the movie Robin Hood, or one version of Robin Hood. There are several Robin Hood movies, where if you were going to transport your gold, you needed a whole army to protect the gold, because the thieves and the scoundrels, the road bandits were all coming in to steal your gold. You see, so gold is very heavy. It's very, very heavy, and it's bulky. So if you have to go and do some big deal, if you have to go and try and buy some land, you have to carry a lot of gold, you see. And so there was limitation in how much gold you could transport. But in spite of that, there was a lot of this standard stayed for hundreds of years. This gold standard, even though it was challenging, it stayed for hundreds of years. But it got to a time when the banking system started coming in. Now, what the banking system was doing then is that if you had gold and you were traveling, and you didn't want to carry your gold because you already need an army to transport the gold, If you didn't feel like carrying your gold and walking, I mean, traveling long distance to go and do business, you went to the palace. The king's palace was usually the bank. Later on, the bank became separate from the king's palace, but essentially the king's palace was the bank. So you carried your gold to the king's palace, and then the king would give you a note, a piece of paper, a signed piece of paper that said that this man has given me 10,000 pieces of gold. And so basically what it meant was that if you carried that piece of paper anywhere in the kingdom, it guaranteed that you indeed had 10,000 pieces of gold, and you could actually use that paper to purchase something of equivalent value. So if you wanted to buy land and the land was valued at 10,000 pieces of gold, you could give that paper to the landowner, and the landowner will keep the land because you have indeed for the land with the 10,000 pieces of gold, which at this point is sitting in the king's palace. You see, but the fact that the king has stamped the letter shows that you actually indeed have 10,000 pieces of gold. And so it was more like based on trust that indeed that 10,000 pieces of gold was there. And indeed, when the landowner now carried that piece of paper to the king's palace, the king would indeed give him 10,000 pieces of gold. So yes, indeed, the piece of paper was actually valued the same or equivalent value as the gold pieces that you had in the king's palace. Now, this is actually what eventually, I mean, you can tell that this is what eventually led to the creation of the paper currency. So it got to a point where now each country, decided we're going to actually print currency, which was equivalent to gold. So you've heard about gold-backed currency. So currencies had gold. I mean, central banks had gold sitting in their had gold sitting in their what's that thing called? Their vaults. Yes, equivalent to the amount of currency they had actually printed. So if the Bank of Ghana printed 100 million cedis, it meant that the Bank of Ghana actually had 100 million cedis worth of gold sitting in their vault. If the Bank of England they printed 100 million pounds, it means that they actually had 100 million pounds worth of gold. So every banknote was backed by an equivalent value of gold. If you had 10,000 cedis in your bank account, it means that you actually had 10,000 pieces of gold. So that is the history. And this was all well and good. In fact, if this was the case, everything would have been fine because it meant that your money was actually backed with something. But fast forward to the 1970s. Now, I'm giving this history very important. That's why I'm spending time on it. It's giving me the foundation of what we are going to discuss moving forward. So fast forward to the 1970s. Then the banks decided that, well, you know what? Now the trust has been built. People know that our money is backed by gold. So why do we want to waste resources, storing gold? This is actually quite interesting. You don't actually need the history. It's funny, it's interesting, it's sad all at the same time. So in the 1970s, the banking system decided that they were no longer going to keep a gold standard. And so 1970 coming down to all the way to 2022 that we are in right now, there's no currency that is backed by gold. In other words, the paper you are holding that you are calling money is not even worth the piece of paper that it is printed on. Because if you took that money right now, there's nothing of value behind it. And so the only reason why you and I believe that indeed the money we have in our hands or the money we have in our pockets is worth worthy of something is because we have decided that that is how it should be. So our money is actually not of value, or there's no inherent value in the money that we are using today. I hope this is clear. In the past, the money you are holding had the value of gold, as in your 10,000 Ghana cedis had equivalent of 10,000 Ghana cedis in gold backing it. Today, your 10,000 cedis has nothing backing it. It's just paper that has been printed on it as 10,000 cedis, which means that inherently there's no value in that 10,000 Ghana cedis. It is just that I trust that indeed the 10,000 cedis is worth 10,000 cedis. That's all, trust. Which means that trust can be broken. And that is really, really dangerous. And in case you haven't guessed already what I'm driving at, I'm trying to tell you that the first reason, the number one reason why you should not work for money or you should not make money the focus of your endeavors is because there is no inherent value in that thing called money. There's no inherent value in it. And so if you make it the centerpiece of your attention, if you make it the focus of your endeavors, if you make it your end all and be all, you are setting yourself up for disaster. Case in point, let's focus on the Ghana cedi and for the next 5 minutes or so. Between January and today, the Ghana cedi has devalued by over 14%. It has depreciated by over 14%. What does that mean? What this means is that if you were holding 100 Ghana cedis in your bank account from January 1, today, May 8th, that 100 cedis is now worth only about 84 or 85 Ghana cedis. What that 100 cedis could have done in January it cannot do the same in May. That's depreciation. And to make matters worse, the inflation currently is sitting at over 15%, which means that not only has the value of your 100 cedis reduced, it means that even if you were able to top it up to 100 Ghana cedis, you will still not be able to buy the things that you were buying for 100 cedis in January. It means that now you have to add an additional 15 Ghana cedis to your 100 Ghana cedis before it can be able to buy the same things it was buying in January. So if you actually do the math, it means that you need a total of about 30% extra to add to your current money right now to be able to do the same thing that money was doing in January. Now I know there's a lot of technologies back and forth because and it's quite frustrating and interesting at the same time that you are looking at 100 cedis, but that 100 cedis is apparently now worth 84 cedis. And that 84 cedis, you need to add an extra 30% before you can buy the same thing that 100 cedis was buying. And so if you make money your focus, you are always going to play catch up because the cedi is always going to I mean, if we are to go with history, since the 1957 when the cedi came to be, it has been depreciating since then and has not stopped depreciating. In the early 2000s, there was what they call that when they remove the 4 zeros, what they call that redenomination of the cedi to try and control these things. But you know what happened, right? Now we are getting back to those days, and so you cannot make money your focus because there is no inherent value in the money, and because there's no inherent value in the money, other people have control, or other people through the actions and inactions of other people, it can affect the value of your money. We were sitting somewhere in Ghana, Accra for me, and then Russia decided to attack Ukraine, and suddenly my money has devalued. So somebody's decision has affected my money. If indeed there was gold backing my money, it would not be devaluing. But because there's nothing backing it, markets the dynamics determine where my money should go, and so it's devaluing to no problem. And there's nothing you can do about it as an individual. There's absolutely nothing you can do about it because these are economic factors, and that's the reality. So do not make money your focus because there is no inherent value in it. I know it's confusing, it's complicated, but it is what it is. You see, so now for you to be able to make ends meet, you see, imagine you are already doing 2 jobs, you're working 2 jobs, you're working overtime, you're pushing the boundaries left and right. What are you going to do with yourself now that your money is devaluing? What are you going to take a 3rd job? Are you going to work double overtime? I mean, what can you do? And so you cannot make money the focus, period. The second reason why you should not be working for money is that you will never get enough. Let's keep it simple. You never get enough. You will never get enough of money. Now, here's a fact, and I live this fact, so I know your salary is only good for 3 months. It's only good for 3 months. I mean, when you get a new job, or you get a salary raise, or you get a bonus, it's only good for 3 months. By the end of the 3rd month of your new salary or your new job, you are used to your salary, it does not motivate you anymore, and you're already looking for the next place to make some more money. Tell me I'm wrong. I know you can't tell me I'm wrong because it's a fact. It's a fact that your salary is only good for 3 months. And that in itself is a problem. It's a problem because the way our brain is wired, and without restriction or without proper training or without proper grounding, human as we are, we will always rise. Our expenditure will always rise to match our income. Now, this is a crazy habit that humans have, that if you are not aware of it and if you don't do anything about it, you will always be playing catch up. Your expenditure, your expenses, your taste will always rise to match your income. And so if you do not stem that taste, or if you do not stem those expenses, you will be forced to keep working longer hours, to keep working harder, just so you can make enough money. You see, because the thinking is that the more I earn, the more likely it is that I'll become rich, I'll become comfortable. But it is also, again, a known fact that that is not true. In fact, 80%, yes, 80% of people who win the lottery are worse off 5 years from the time they won than before they even won the lottery. They are probably in debt, they have messed up their lives just because they won a lottery. And so money in itself is a tool that that's when it's in the wrong hands, or when it's in the hands of an inexperienced or a less knowledgeable person, causes a lot of damage. Money is kind of like fire. It's a good servant but a bad master. You need to have a grip on money before you actually get money. Otherwise, you are in trouble. You see. And you if there's actually a group of people, there's an interesting name that I found for a certain group of a category of people. Let me see if I can trace that name. They are called what? Yes, they are called the Henrys. In my research, I came across this term, and it was very, very interesting. There's a group of people who have been classified as Henrys. And let me tell you what a Henry means. It means high earners, not rich yet. And it's a term that was coined in America. And it's a group of people who earn between $250,000 and $500,000 every year annually. American salary is usually an annual thing, so $250,000 to $500,000 a year, and yet they are not rich. Now, you need to understand that only about 5% of Americans earn this money, which means that it's not just anybody who can earn this amount of money. And so they are among the highest paid people in the world, actually. But these are also people who are not wealthy. And it's so well defined that they've actually got a name for them: high earners, not rich yet. The Henrys, those are the people. And why are they not rich yet? It's because majority, up to 80 to 90% of their income is channeled to expenses. Currently, a lot of marketing is geared towards the Henrys, because they actually have the money to spend, and they actually do spend. You see, there are people who have money but they don't spend. And companies don't like them. I don't like them because they don't spend. I mean, I'm a salesperson, so I sell a lot. And if you're a person who does not spend, I don't like you. And that's the fact. Because if you don't buy, I don't make money, so you have to buy. And so right now, there's a lot of focus on the Henrys, because companies have realized that they have spending power. And so they target them with their advert, they target them with their marketing. And now, thanks to Facebook, Instagram, all the social media, there's a lot of data. You can skew the data very well to target these people. And so Louis Vuitton, you name it, all the top luxury brands are targeting these guys because they actually have money to spend, and they are more likely to spend. And so 80-90% of their income is geared towards expenses. And because they are spending so much of their money, they are not saving enough to actually build wealth. And that's the trick. Wealth building is not a function of your earning. Of course, your earning is a major factor, provided you know what to do with it. You understand? Wealth building is a function of your saving. We call it defense. And if you have joined the Impact series in the previous episode, we actually spoke about the offense and the defense strategy of building wealth. If you want to build wealth, the key is your defense. And defense is talking about how much savings you are making. So you are cutting out unnecessary expenditure, and even the expenditure that is necessary, you are finding ways and means to reduce it. So that you can actually create a pool of money that you can actually put in certain areas, certain funds that you can now use to build security, to build cash flow, which we'll come to shortly. So the Henrys. And so it's not about how much you are earning. And so if you don't gain control over your money, if you don't gain control over your expenditure, you are going to become a Henry. You are going to earn a lot. You are going to chase jobs. You are going to You're going to move from one job to another job because you are trying to chase a better salary. And yes, you might get a better salary. In fact, you will get a better salary, but it will not reflect in your bank account because you are going to increase your expenditure to match your income. You are going to move into a bigger house. You're going to buy a flashier car. You're going to probably be giving more and a bigger offering in church. You're going to sponsor more projects. You're probably going to be traveling more to see the world. All these things are good. But all these things are things that you must plan well, you must budget for, so that it does not take a huge chunk out of your income. This is very, very important. This is happening. There are people who are earning high incomes who are not rich, and there are people who are earning low incomes who are, in fact, very wealthy. In fact, there's a classic story of a janitor in a high school who, at the time of his death, was worth $8 million. You can actually Google this story. A janitor in a high school who, at the time of death, now in case you don't know what a janitor is, janitor in Ghana, we call them cleaners. Yes, there was a cleaner who, at the time of dying, was worth $8 million, and he was working as a janitor, which means that he was not earning high income. But obviously, by his lifestyle, he was able to save so much. I mean, somebody might say that what's the point now? He's dead and gone. But that one is not your problem. Don't worry about waiting, no concern you. The person decided to save his money. Whether he decided to give it to charity, give it to his children, that one is not your problem. All I'm trying to tell you is that it is possible to have a low-paying job and still be wealthy. That is the point I'm trying to make. It's not about how high you are earning. It's about what you are doing after the money hits your account. That's the most important thing. So the second reason why I shouldn't focus on the money is because you will never earn enough. Because typical human nature, your expenditure, your lifestyle will always grow to match your income. And so you need to get your expenditure in check. And then you'll be able to probably spend more time doing the things you value, things you love. Because if your expenditure is in check, you might realize that you probably don't need that second job. And if you don't need that second job, it means that you're going to have time to actually take care of yourself. Build better relationships with your family. Live a more fulfilling life. Do more voluntary work. Have time to actually learn things that are relevant to you, so that you can become a more valuable person. You see, and the interesting thing is that as you become a more valuable person, money will chase you, which is something I will discuss later on. You see, so that's the point number 2. Like I said, we are going straight to the point. We are not beating about the bush, so that we can get everything down that we need to get done, so that we can move forward with our learnings. So, I mean, have you actually wondered why? And this is a question. Have you actually wondered why some of the wealthiest CEOs, some of the wealthiest people in the world, they take a salary of $1? Have you actually wondered why? Now, the third reason why you should not be working for money is because the government, yes, the government is on standby, ready to take its fair share. And the fair is in big inverted commas. Government is waiting to take its fair share of your money. Taxes, that's what I'm talking about. The tax man is ready to take his share, his cut of whatever you earn. And that taxes thing, it's not a joke. It's not funny at all. Yes. Are you aware? No, it's not about what I aware. It's a fact that employees actually pay the most tax. Are you aware? Building wealth is not so much dependent on your earning, but what you do. I agree, John. Are you aware that employees pay the highest tax in the world? In the world, though, employees pay the highest direct tax. And if you stretch it, they actually pay the highest tax of any level. Because by direct tax, it means that you're referring to income tax in Ghana, we call it PAY, pay as you earn. Employees pay the highest. And then after you have received your net salary, everything else you buy, there's VAT on top of it. Now there's e-levy. So the employees actually pay the highest tax in the world, period. And this is a fact. If you don't know this, I'm telling you that as an employee, you pay the highest form of tax. And get this, the higher your salary as an employee, the higher the tax you pay. Oh my goodness. And so here we are praying for higher salaries. We are looking for jobs with higher salaries. But guess what? As your salary increases, so does your tax. And so should you really be out there looking for a better salary? Charlie, the pain, it's the pain. I'm telling you, it's not easy at all. All right, I'm here. I'm seeing some more comments on the platform. Let's see before we move on. Your expenses will always grow to equal your income unless you protect. Yes, you protect that. Somebody says it's quite true. I can attest to the fact as I prepare payroll monthly. Interesting. Oh, so Benedict, you are confirming what I'm saying. Yes. Well, I am not a tax man. I'm not a tax expert. I'm just somebody who has experience being paid as an employee. So I know what I'm talking about. So your salary, as your salary increases, your tax also increases. In fact, the more you earn as an employee, the more you pay. Okay, check this out. Let's do this calculation. There's a whole PAYE calculator out there on Google. I mean, I'm not going to bore you with all that details, but just check this out. If your salary was actually 40,000, if you got a wow contract, somebody came to you and gave you the best deal of your lifetime, 40,000 is a month salary, gross salary. Do you know how much your take home would actually be? Let me blow your mind. If your salary was 40,000 cedis, your take home, as in your net pay, would actually be what? 27,000 Ghana cedis. That's how much you actually take home, which means that your tax alone is about 13,000 Ghana cedis. God damn. Charlie, as I'm talking the things, my BP is really going up. Charlie, it's so frustrating that you think that you work hard, you've actually worked for 40,000 Ghana cedis. You've gone days without sleep, nights, you are traveling left and right, trying to make ends meet. You are doing good work. And then they pay you 40,000 Ghana cedis. On paper, they pay you 40,000 Ghana cedis. But when you check your bank account, the money that hits your account is 27,000 cedis. I mean, that's crazy. That's crazy. 30% of your salary is taken by government, who, for all intents and purposes, didn't do anything in your office. You are the one who went there every day. You are the one that sat through traffic every day. You are the one that woke up at 4 a.m. every day. You are the one that was racking your brain every day. Then government takes 30 solid percent. It's sad. It's really, really sad. But check this out. If I bought some shares, right? If I bought some shares in the company, each company, let's say what, Kelvin Incorporated. Yes, yeah, you should buy shares in Kelvin Incorporated. If I had shares in my own company, as in I own Kelvin Incorporated, and I have shares in Kelvin Incorporated, and at the end of the year, Kelvin Incorporated declared a dividend, and my share of the dividend was 40,000 cedis, right? If I got paid 40,000 cedis as dividend, as income from my dividend, guess what? I will pay tax. I'm not for tax, we will pay tax definitely, but I would pay only 8% tax in Ghana. Let that sink in. I hope it makes sense. So I would have also been paid 40,000 Ghana cedis, but my tax component is only 8%. Whereas you that went out every day to go and hustle out the result, you also earn 40,000, but the government is taking 30% from your money. And so you went out there chasing the money. And guess what? It is what it is. It's not my fault. It's not my fault, you don't understand money. All right, Benedict is saying I should go over again. Please, Benedict, what exactly do you want me to go over? So let me go over. So I'm saying that assuming you're an employee. Okay, let's come back. You are an employee. This is the company is called Kelvin Incorporated. It's my company. I own the company. And I employed you, Benedict. I employed you to be my CEO. And because you are a competent CEO, I pushed you from MTN. I brought you to run Kelvin Incorporated. So I gave you a salary of 40,000 Ghana cedis, right? But you are the CEO. You are my employee. You are the CEO of the company, right? I pay you 40,000 Ghana cedis. What's going to happen is that government of Ghana is going to demand 30% of your salary as an employee. They're going to demand 30% of that salary. They're going to take 13,000 Ghana cedis from your 40,000 and take it to government of Ghana for them to build the road. It's good to pay tax. But you that you are working as a CEO, you are going to now collect only 27,000. Even though people agree that you are collecting 40,000, but government will take 30%. Now, me as a CEO who has built the company and brought you to run the company, I own shares in the company. Other people own shares in the company. My shares in the company guarantee or give me a dividend of the same 40,000 Ghana cedis at the end of the year. So I get paid my 40,000 Ghana cedis. But there's something called capital gains tax. And capital gains tax on dividend is 8%. So government of Ghana will take only 8% from that money and take it to build the roads. And so I'll collect all the rest of the money. I think it comes to about 35,000 or so. And so And this is not a Ghana thing. Don't get, this is not about Ghana. This is a worldwide thing. The whole world is set up to tax the employee. And so if you think that being an employee is a good place to be, by all means stay, but I'm telling you that there's more out there, and you are not realizing because you have not thought big enough. Where our upbringing is that go to school, get a good job, and stay there forever. But if that is all you do, you are going to end up funding government. Whereas even if I don't go to school, but I understand money and I establish a business, I'm going to be far better off than you. Of course, the risk is also higher, and so that's why probably the return is also high. But let me blow your mind some more. I can actually go and open a shop in Makola shop, and pay a tax stamp. Tax stamp, right? In Ghana, there's some of the shops, informal sector, they do tax stamp. So I can do a tax stamp of 250 Ghana cedis for a quarter. Every quarter you pay tax stamp. So 250 Ghana cedis tax stamp, and I will then collect my 40,000 cedis, and I don't pay any tax at all. And so all I'm trying to tell you is that there's always a better way out there. Hard work is good, working long hours is good, but working smart is even better. So don't limit yourself to what you know. Explore, expand your knowledge. And that's why the Impact TV is here, because I'm hoping that at the end of this call, at the end of this session, somebody is going to be motivated to go and start thinking deep, thinking wide, thinking outside the box, so that you don't just keep looking for a job. Because if all you do is look for a job, then, like I said, you are the one who's going to pay the most tax compared to the other side. And Patrick already mentioned the cash flow quadrant, which is actually part of, and it's on my list. We're going to talk about it briefly before we wrap. So understand that tax is part of the reason why you should not make money your focus, because if money is your focus, you are going to keep looking for a better paying job, and as your pay increases, your tax is also going to increase, which technically means that you are earning less. Technically. All right, so those are the three reasons. So just to summarize, the third reason is that money does not have in itself an inherent value, so don't make it your focus. The second reason is that you never have enough, so it cannot be your focus. And the third reason is that the tax man will take his cut. So do not make money your focus. But let's take this a step further. You see, as we are discussing these things, I'm trying to get you to think about starting yourself a business. You see, yes, it's not everybody. I'm sure you tell me not everybody is cut out for business, but you see, you must have that mindset. You see, when you have the mindset of a businessman, or you have the business mindset, even as an employee, you're going to structure yourself as like a business. I was listening to a podcast recently where somebody was a tax consultant was actually on there and was talking about how her family was a woman. She said her family is actually a business. She's actually registered her family as a business. And that business, she actually employs her children as her staff. And she was talking about the benefits that she gets because of what she's doing. And it's amazing how beneficial it has been for her. Now, she's a tax consultant, so she knows what she's doing. I can't set up my family as a business, but at least if I have that business mindset, there are things that I will do in my job that the one who has an employee mindset will not do. For instance, typical example. So you are supposed to report to work at 8 and then close work at 5. Now, you'll be given targets. You know that I'm supposed to achieve you have 30 days to achieve your target so that you can get your salary, right? Why do you want to wait until day 20 to achieve your target? Why do you want to wait until day 30 to achieve your target? Why can't you push yourself and achieve the target in 10 days so that you now have the rest of the month to do other things? You understand? When you have this, you're not going to waste your time in unnecessary chatter. A lot of things go on in the workplace that don't bring any results. Most of a lot of, in fact, I dare say about 50% of the time we spend in the office is spent on unproductive things. You see, if you have the mindset of a business person, you are not going to waste time, because time is your most important asset. Time is that thing that you can never have enough of, and so you should not waste it. And if you are good enough at what you are doing, and this is important, if you are good enough at what you are doing, it's so easy to branch out from being an employee to becoming a consultant. If you are the best, let's say, accountant in the department, you could actually build network with other people so much so that you can actually now leave the job. And even though you didn't intend to start a business, because of how good you are, people approach you to do the accounts for them, in your spare time. And you can actually make a business out of that. And remember, and you see, once you make a business out of it, suddenly your tax burden drops from 30% to withholding tax now is 7.5%. You see, so you are offering the same service, you are offering the same accounting service, but whereas you were offering the service as an employee, you are being taxed 30%. Now you're offering that same service as a consultant, you are being taxed 7.5%. And so there's significant benefit to registering, to forming a business out of your core knowledge, out of your core skill. But it will only work if people recognize you as the best in that field. And so by all means, get a job, but don't get a job because you want money. Get a job because you want to build a network. Get a job because you want to build the skills. Get a job because it will open doors for you when you are ready to set up your business. Period. Don't make money the focus. And so I hope that you've actually grasped the concept that I'm trying to tell you today. And yes, money is important. Yes, I recognize money is important. Even this thing I'm doing is all about the money. Money is important. So don't get me wrong. I love money, but money is not the focus. The focus is giving value. And I know for a fact that you having joined this session have got value. And I dare say have got you to start thinking about what you can improve yourself on, so that people will know you for and will approach you to offer those services for them in your spare time, which is the beginning of your business. And I know that I've impacted you in that way. So that's the value I'm talking about. You see, it is important that you become a valuable person, because it's only when you are valuable that money will follow you, because value commands its worth in gold. And so you need to be valuable so that gold will chase you. You see, prayer is important, but skill is also important. And skill with prayer is even importanter. So by all means, let us pray, but let us develop the skills that are needed so that we can become of value, valuable members of society, so that we can make the impact that we seek to make. At this point, I'm going to pause here. If you have any question, if you have any contribution, if you have anything that you have learned from today's session, please drop it in the comment section so that we know for the fact that indeed we have made impact today. So please drop your comments, your feedback, your anything. If you want to also speak, if you want to speak, you want to talk, this is the time. And put up your hand so that I can unmute your mic and you can share whatever it is that you want to share. So any feedback would be appreciated. Thank you very much for spending your time with me this evening. The Impact series has, fourth edition. It is what it is. We are making impact every day. Patrick says 7.5 is way better than 30%. I agree. I definitely agree. Anybody else on Facebook? Let's see on Facebook. If you are on Facebook, yes, Abdul is saying you don't need a high-paying job to be wealthy. That's very, very true. If you have any feedback on Facebook, drop it in the comment section as well. If you have any comments you want to make, feel free to put up your hand. I'll unmute you, and then you can share what you want to share. It has been an intense session. Like I said, straight to the point today. We are not doing any long talk. Straight to the point. Bam, bam, bam. We finished 3 points. 3 reasons why you need to not make money a focus, and that's it. So if there are no further comments, then I'm happy that you spent your time with me this evening. Thank you very much for being part of the Impact Series 4th edition. Stand by for the 5th edition coming at the end of this month. I'll be very grateful if you can join me again on that session. So have a lovely day, guys. Stay blessed. Peace.
Every time I close my eyes,